Reuters, U.S. stock index futures fell on Monday as growing trade tensions between the United States and China kept investors on edge, with the latest threat involving a check on Chinese investments in U.S. technology firms. The S&P 500 mini futures dropped 0.5% after a government official, with knowledge of the matter, said the U.S. Treasury Department was drafting curbs that would block firms with at least 25% Chinese ownership from buying U.S. companies with a euro or industrially significant technology euro. Chip makers and U.S. listed Chinese companies were among the most traded stocks in early pre-market trading on Monday. Advanced Micro Devices fell 0.4% and Alibaba dropped 1.7%. The move marks another escalation of President Donald Trump's euro trademark's trade conflict with China, which has sent ripples across financial markets and threatened to dent global growth. The Dow Jones Industrial Average lost 2% last week, posting its weakest weekly performance since late March, after Trump threatened to impose a 20% tariff on all European Union car imports. The EUA Euro, which has promised retaliatory measures on motorcycle maker Harley-Davidson, Bourbon and other products, Euro vowed to respond. Harley fell 2.7% on Monday after the company forecast additional costs between $30 million and $45 million for the rest of 2018, due to EU tariffs. Dow E-minis were down 166 points, or 0.67%, and Nasdaq 100 E-minis were down 60.25 points, or 0.83%. Brent crude prices, which provided support to the equity markets last week, fell more than 1.5% as investors prepared for an extra 1 million barrels per day in output to hit the markets after OPEC and its partners agreed to raise production. O/R. In economic data, a Commerce Department report is expected to show new home sales rose 1.5% to a 667,000 unit rate in May. The report is due at 10 a.m. ET. Among early gainers was Campbell Soup, which jumped 6.2% after a New York Post report that Kraft Heinz was considering buying the company. Education Realty Trust Inc. rose 1.2% after the company said it would be acquired by an affiliate of Greystar Real Estate Partners for about $4.6 billion, including debt.